வணக்கம் ஃப்ரெண்ட்ஸ். இன்று நம்ம பார்க்க போறது ஒரு சீக்ரெட் டாபிக். பல பேரு ஷேர் மார்க்கெட் பத்தி பேசுறாங்க, ஆனா இந்த விஷயம் பத்தி யாரும் டீடைலா சொல்லவே மாட்டாங்க. I am talking about dividend stocks. அதாவது stocks that pay you even while you sleep. Today you'll learn how dividend stocks quietly grow your wealth year after year and why they are one of the safest and smartest ways to build long-term financial freedom. Ready-ya? Let's dive in. Before we get into the video, here is an important disclaimer. In the video purely educational purpose kaga mattum. It is not financial advice or buy-sell recommendation. Please do your own research or consult a SEBI-registered financial advisor before investing. Market returns vary and involve risk. Let's start with one powerful real-world example. Coal India Limited. Imagine you invested rupees 105 per share on 1st January 2021. Random date dhaan, just to understand how dividends make magic happen over time. In the last 4 years from 2021 to 2025, Coal India gave multiple dividends totaling rupees 96.6 per share. Wow! அதாவது நீங்க 105 வாங்குனீங்க, 96 rupees dividend already கிடைச்சிருக்கு without selling your stock. இப்போ 2025 ஜனவரிக்கு அந்த சேம் ஷேர் பிரைஸ் அரௌண்ட் 380 rupees. So your total value equal to rupees 380 plus rupees 96, that is equal to rupees 476. That's an unbelievable 40% CAGR return and almost 17% purely from dividends. இதுதான் power of dividend compounding. Stock move ஆகலனாலும் dividend income தான் உங்க growthக்கு backbone. Now, let's take another case. Hindustan Zinc Limited. Back in January 2021, its price was rupees 240 per share. Now in the 4-year period, total dividend paid rupees 135 per share. அதாவது rupees 240 stock 4 yearsல rupees 375 ஆகிடுச்சு, just from dividends. No trading, no panic, just patient holding. If you include price appreciation, 2025 ஜனவரிக்கு ஷேர் rupees 445. That means total return equals 24% CAGR over 4 years. இப்போ நீங்க கேட்கலாம், இது கோயின்சிடென்ஸா அல்லது எல்லா டிவிடெண்ட் ஸ்டாக்ஸுக்கும் இதே மாதிரி இருக்குமா? Simple answer. Not every stock, but companies with consistent dividend policies tend to reward shareholders beautifully in the long run. Okay, now let's decode the logic behind all this. What exactly is dividend yield? Simple formula. Dividend yield equal to annual dividend by current price into 100. Example, Hindustan Zinc paid 29 rupees dividend last year. Current price 452. Dividend yield 6.4%. So, if you invest 1 lakh rupees, every year you get 6,400 passive income. அந்த income வரும் மாதிரி company stable இருக்கணும். அதுதான் trick. Important note. Dividend yield depends on your buying price. Buy low, yield high. Buy at all-time high, yield smaller. So always pick dividend stocks when they are 20% below their 52-week high. அப்போதான் future return strong ஆகும். Okay, now let's do it practically. Open your browser, type screener.in, then click Create New Screen. Type this query. Dividend yield greater than 3%. Boom! You will get 89 companies. But that's too broad, so let's refine it. Add this. Dividend last year greater than 1000 crore. Dividend preceding year greater than 1000 crore. Now you'll see only 18 companies. These are consistent dividend payers. Next filter, profit after tax greater than 0. Only profitable companies remain. Around 18 stocks. Now add valuation filter. PE ratio less than industry PA. That brings it to around 16 stocks. So they're undervalued and profitable. Finally add down from 52-week high 20%. Boom! Again, only 4 best stocks remain. These are your high-quality dividend candidates. Let's quickly recap your dividend stock screener formula. Number 1, dividend yield greater than 3%. Number 2, dividend paid greater than 1000 crore in last 2 years. Number 3, profitable company. Number 4,
PE less than industry PE. Number 5, price down 20% from 52-week high. In the 5 conditions பூர்த்தி பண்ற companies தான் strong dividend stocks. But wait, இதுல ஒரு mistake நிறைய பேர் பண்ணுவாங்க. They invest blindly without checking future sustainability. Let's talk about a crucial point. Dividend policy. Every listed company publishes its dividend distribution policy. Example, Rec Limited, not a recommendation. Their policy clearly says minimum annual dividend equal to 30% of profit after tax or 5% of net worth, whichever is higher. That's a transparent, investor-friendly approach. இது போல தான் நீங்க ஏதாவது கம்பெனி தேர்வு பண்ணும்போது அந்த கம்பெனி வெப்சைட்ல போய் டிவிடெண்ட் பாலிசி செக்ஷன் பாருங்க. If it has a consistent payout ratio and growing profits, are the strong candidate for your dividend portfolio. Profit growth தான் dividend growthக்கு backbone. Example, Rec Limited profit growth past 3 years 19%, 5-year CAGR 20%. That's why its dividend per share continuously rising. So, while screening dividend stocks, check P&L growth trend and dividend payout ratio side by side. Consistent profit equal to continuous cash flow for investors. Not all sectors suit dividend investing. For example, technology stocks reinvest profits, so low dividends. But power, PSU, banking, metal, and FMCG sectors regularly share profit with investors. So if you are building a dividend portfolio, focus on sectors like power, NTPC, REC, Coal India; PSU banks, SBI, Bank of Baroda; metal, Hindustan Zinc, NMDC; oil and gas, ONGC, GAIL; FMCG, ITC, Hindustan Unilever. These sectors have predictable cash flow and government-backed companies ensure regular payouts. Warren Buffett today's biggest magic isn't stock picking. It's time plus patience. He is holding companies like Coca-Cola, Chevron, and Apple for decades, earning $3 billion per year just from dividends. Adu overnight agagla friends. He built it over 40 to 50 years. So, dividend investing equal to long-term commitment game. Hold quality companies, reinvest dividends, and watch your income snowball. Now I've got a small challenge for you. Find out current dividend taxation rate in India. Comment below. Let's see how many true learners we have got in Money Arivu family. So friends, today you have learned real examples, Coal India, Hindustan Zinc, dividend yield concept, screener formula to find best stocks, dividend policy importance, patience as key to wealth. This is not about quick profit. It's about slow, steady, and smart wealth building. Dividend investing builds not just money, it builds peace of mind. Idu unga channel, Money Arivu channel. Like, comment, subscribe, and share this with friends who want passive income through smart investing. Stay wise, stay invested, stay Arivu.